institutions continue to adopt digital assets at a breakneck pace. Here to discuss how they can integrate these assets into a strategy that will support growth and evolving business needs are moderator Nolan Bauerle and John Melton and Terrence Dempsey.
Perfect. Welcome, everyone. Welcome. My name is Nolan Bauerle. I'll be hosting this session. It's not important, but if you see in my bio, I call myself a Bitcoiner. So I've been in the industry for quite a while. And there's a really weird thing that happened in like 2015. It was really easy to get paid in Bitcoin. Believe it or not, a lot of these early companies didn't have bank accounts. They couldn't get bank accounts. So for a lot of these companies to hire someone to write something or produce some content, they were very happy to pay you in Bitcoin. But sometimes you did need to make cash, and for various reasons. And one of the most amazing things happened to me in 2015. I got a contract, and someone paid me in a check because there was an actual Bitcoin company that was able to get a bank account. And I thought it was the most amazing thing I'd ever seen. Old tech, believe it or not, was impressing me all of a sudden. And it actually came from Silvergate. It was one of the most amazing things. So how the heck did that happen? How was Silvergate so quick to be able to actually offer banking services to these startups?
Sure.
And thanks for the check. It was great.
Hey, happy we could facilitate that payment and that piece of work. That's a great story, and I think it kind of gets to the heart of Silvergate's DNA. Even though that check may have come in 2014, I'm sure our CEO Alan Lane, for a year plus before that, was really going down his own personal Bitcoin rabbit hole journey. And as he tells it, the meme at the time was Bitcoin, be your own bank. So maybe this is something that we as a state-chartered commercial bank out in La Jolla, California, should look into. And really, for us, it was about, on the one hand, it was strategically important for us and an interesting deposit gathering, niche. But as we've kind of progressed, it's been about solving our clients' problems, starting with fundamental, how do we facilitate regular business banking operations, to payments with the Silvergate exchange network, foreign exchange services, as well as Bitcoin collateralized lending. Where really now it's our sole focus.
Now, you guys were, this was a great opportunity, like you said, to open up all these new avenues, but it was a small bank that was seeing this niche and a chance to really go ahead. At the same time, and around the same time period, one of the largest institutions in the country was also maybe not sending checks to people, but certainly getting some exposure. What got you guys committed at such an early time?
Yeah, so at Fidelity, a well-diversified financial services company that has a major focus on technology, and so just being in those spheres and understanding what new transformative technologies could impact our business 5, 10, 15, 20 years down the line is where it first got introduced to us in around 2013 timeline. But also a customer that, an institution that is customer obsessed. And so when you have customers that are talking about these assets and kind of wanting access to these assets and understanding there may be holes in the market, we started thinking about, can we actually commercialize and put this together for our customers? And so it was kind of the perfect storm of being a technology forward thinking, innovative company that just happens to be financial services, and listening to feedback from our, various segments of customers. I think we're most well known for being a retail brokerage platform, but service tens of thousands of institutions that, are hedge funds and RIAs and broker dealers, and they were really having a tough time accessing the crypto market at that time, or frankly I should say the Bitcoin market at that time, since a lot of the infrastructure was so consumer driven. So we saw a great opportunity to actually commercialize and launch a product that is now Fidelity Digital Assets.
So, and we're going to continue to talk about products and how Bitcoin does play a role in these portfolios, but I just want to start with the macro backdrop. Everyone's here, inflation, right? We get it. Everyone's heard about it 1,000 times. But the important thing I want to ask when it comes to the context of this portfolio is how long, is it important to determine how long this is going to be as you construct these, as you integrate into the portfolio? How long this environment is going to exist for is, I think, an important factor. Do you guys bring that into these ideas, or is the time frame irrelevant to you?
I think for me, it's less important. I would say irrelevant. I think timing is very important when it comes to everything. But our goal is to build infrastructure for this asset class into the future. And so, the pandemic in March of 2020, where this really started to spike, was a catalyst for institutional investors to add this to their portfolio. But the cat's out of the bag at this point, right? And so institutions now fully understand this asset class, and so now they're just looking for various services that they can add this asset or Bitcoin or crypto at large to their portfolio, and so they're now yearning for services from various providers, and so that catalyst certainly sparked this, and the longer it goes on, sure, the more interest there may be, but I think is much more of a catalyst for us in March 2020.
Well, the catalyst piece, but it also off a period of US dollar volatility. So it's a thing that's always explained to Bitcoiners that there's this volatility thing in the price. But when I do something like look at the entire research of everything produced on Wall Street pre-2020, you can throw it all out. Like literally every piece of research they ever did. So when I see like a whole research firm having institutional knowledge that all of a sudden is useless, that's a type of volatility unto itself, right? So is really this volatility in the US dollar piece important? Because in theory, Bitcoin, while the exchange is the rate of exchange with the US dollar is an important factor.
Sure.
There's pieces of it that just simply don't matter. It's stable in a sense.
Sure. And sitting at a commercial bank, we really have an interesting relationship with the US dollar and volatility in general. So Silvergate is the transactional bank for all of the regulated stable coins. So, I mentioned our Bitcoin-backed lending business, but the SEN and the Silvergate Exchange Network is a 24/7, 365, kind of our breakthrough product in solving a key problem in the market of being the fiat on-ramp and off-ramp, and sort of the evolution of how we think of dollar rails and in stable coins. I think that could be an interesting next chapter for Silvergate. So we've continued to facilitate, because of a lot of volatility, tremendous amounts of dollar transactions. And I think, getting back to your original point about inflation, the sorts of conversations and the types of clients that Silvergate is able to serve on the balance sheet side of the equation as they adopt Bitcoin are more confident having a longer term view because of inflation or other, kind of macro considerations, has really given us, the opportunity to grow the lending piece of the business and, with partnerships like Fidelity.
And if I could just maybe add to that, I think, I think what you're kind of getting at is Bitcoin as a store of value and hedging against volatility and inflation and all of those things. And I think we're at an inflection point where Bitcoin and other digital assets have those properties of a store of value. It's almost an aspirational store of value. And I think a lot of the institutions look at it that way, which is a divisible and scarce asset and has all of these properties, but the market cap is still not big enough, and it's still very correlated to the markets. Prior to probably 2020, it was not. But if you look at any correlation chart from 2020 on, it is highly correlated. But it has these properties, and then it also has this, kind of value, if you will, in terms of the network that is there as well, and users and transactions are continue to go up in the right, and then this aspirational store of value. I think that's where it becomes very interesting. We're at this inflection point where it's not a true store of value just yet, but we can all see it getting there.
Yeah, the frame I use for that is you've got Bitcoin, the commodity, and I think that's really clear. We see it as a commodity. But there's also a separate commodity, which is this block space piece, right? And you have to look at them sort of separately, right? Because the first piece is collateral, like you were saying, the market cap isn't big, but the network is. Ultimately, all of these things for Bitcoin, the commodity, have to combine together to orchestrate a type of upgrade, let's say, of Bitcoin as collateral. It has to reach what people project it could be the most amazing, pristine collateral in the world. How far are we on that path? That's something that people have been talking about forever, and that means the uses of it have to be as multifaceted as what we have with the dollar today. Obviously, anything can be done with the dollar. Right now, Bitcoin, that's not the case. Where are we in this path? Where does the yellow brick road go? How far are we to when we get to the actual thing and we find Bitcoin as the most pristine collateral?
Sure. I think we're very early is the answer to the question. I think and from our perspective, I think that's just indicated by the types of conversations. Silvergate, going back to kind of our roots in the digital asset space and the early uses of Bitcoin, is really a really attractive trading vehicle with a lot of volatility and a fragmented market that provided a lot of opportunity. That's one interesting leverage use case. But more and more of the conversations we're having are with corporates, with longer term, more traditional funds, where they view this not so much as an allocation that might mimic some like venture capital type returns with a really unique liquidity profile. But this is a balance sheet asset that they can hold for the long term, and they can face off with a commercial bank that's publicly traded and regulated by the Federal Reserve, and obtain really substantial financing to grow their businesses and to continue to operate in the industry. And that's really core to Silvergate's mission of our go forward really ambitions are to have our lending really be focused on our clients who make up the 1,500 digital asset clients that we serve right now. And working with folks like Fidelity to kind of talk about the block space, I don't think you get as far as we have without really having a deep understanding of the protocol and an interest in getting closer to the protocol. Mm-hmm. But working with folks like Fidelity who are actually interacting with the protocol itself, securing the assets in a really thoughtful manner, really allows us to do the business that we do on the traditional side, but it wouldn't be possible without people who have that primary exposure to Bitcoin.
So you're saying the pledging and the hedging piece, right? The pledging, simple to get your mind around. The hedging piece, especially with DeFi, seeing that whole block space as commodity, network as technology, the creation of not a P2P contract, but the surprise that we all saw when Uniswap scaled, that there was in fact an opportunity for a person to contract. And when all that happened, you see that there is a certain value in getting close to the protocol. But of course, in the case of Bitcoin, it's orchestrated a different way, and we can see how this, between essentially your work together, how this can unlock in a very securely integrating the old system with the new system way. So can you describe how this sense of block space, a bank, and in the end, almost a technological infrastructure provider that is allowing banks to get close to the collateral, to the actual commodity. How does this work?
Yeah, and I think it's important to know, right, that the topic of this conversation is Bitcoin and institutional portfolio, and especially from a regulated institutional standpoint that needs that collateral to be perfected, there are no rules or regulations that tell you how to do that. If you look at the UCC, it's going to tell you it needs to sit with a securities intermediary, and a securities intermediary, you cannot point to a decentralized network. That just doesn't fit in there. And so, if the topic was Bitcoin's role in a portfolio or another asset as collateral, maybe the answer would be different. But the way this works is, this kind of sits in wallet infrastructure that Fidelity holds. You could have an investor that is long an asset. They pledge that Bitcoin as collateral. We hold that in a very secure account for them, and they can't actually move those assets unless the LTV moves in their favor or they default on the loan. We receive a notice for that default to go away. And then you work with a lender like Silvergate that will actually then lend you dollars based off of that collateral that's sitting there, and we provide them feeds, and that's all there. And to your point on the block space, I think a lot of this can also happen on an off-chain basis. So you're not kind of moving assets left, right, every time the price moves, and the LTV then moves as well. And so this, Abby Johnson did a great job last night, for those that saw her, talking about building a bridge in terms of the traditional financial world and this new world that we're entering. And I think that's really what we're trying to get at here is kind of building traditional or using traditional financial models, but applying them to these new technologies so that we can do that today with an eye towards the future. When someone actually wants to access that asset class. It's going to be a very tough time if you're a hedge fund or a corporation to do a credit risk analysis on a DeFi protocol. They don't have that capability yet to actually go do protocol risk and understand what pledging collateral there means, but they can definitely do that against a regulated financial institution like Silvergate and others that they do all day long today. And that's really our focus, is kind of being that bridge from the traditional world into this new the world we're going to.
So where do you think this synthesis of two groups coming together can bring all of these uses for Bitcoin? What other types of commercial relationships can be produced out of this relationship?
Yeah, I think from Silvergate's perspective, we sit in a really unique place as a bank, and I think thinking about the future of the dollar, I think one of the exciting things is just how much work there is to be done. We're, I think, really at the beginning of our journey with unlocking the power of Bitcoin as collateral, and maybe a little bit more advanced with the Silvergate exchange network and how we facilitate the 24/7, 365 movement of dollars that kind of is not constrained by the legacy wire system. But to Terrence's point about how institutions view sorts of relationships and sort of diligence them from a risk perspective, I could certainly see a lot more seamless offering in the future. Whereas right now we're at the start of the journey. I think that with the proliferation of stablecoins and as we mature as a bank platform, we can make it just a whole lot more seamless for our borrowers.
Now, I wonder if you're thinking about how do I put it? Let me try and arrange this. If you're thinking about going full crypto, right? A lot of people in the industry that have been in it for a long time no longer count their personal wealth in dollars. It's very typical to find people who have been here for a while that literally say, I have, in their mind, this. They count it in Bitcoins. Now, I remember Abby's original product announcement was that you could see her Bitcoin balance from Coinbase on the thing, and it was beautiful. I wonder, is there a way that within this product, there is demand and client demand to see actual net worth in Bitcoin and to measure, how well you've done in Bitcoin versus dollars? Is it a metric that clients are demanding to see their net worth in Bitcoin?
I've not heard of that. I think we're still, for the large part of Fidelity and, kind of 35 million consumers that are on the platform and tens of thousands of institutions, I'm not sure how many of them are full crypto and that would think that way. And I think that just goes to show how much space and opportunity there still is in this ecosystem. And if anyone is a Fidelity customer that would like to see that, I would love to hear it, because it is an interesting way to look at things, right? And it is just being able to take a price feed in and compare it in terms of rate of return on a go-forward basis. But it is not something that we've thought about.
What about you personally, John?
I think that it's just indicative of how incredibly early we are in this whole space. We're it's this wonderful conference with lots of impressive speakers and meetings and events. We're still 5% of the market cap of gold, and if you told anybody that you were going to go engage in the gold financing business, they would say that's not really interesting. However, there are people that I think are really out there on the curve. We've seen a family office fund, that are full crypto. And here's a Bitcoin balance sheet, and I need to denominate everything in Bitcoin. So there are people that we see at all these conferences that are living on a Bitcoin standard, and I think that it certainly hasn't reached critical mass from an institutional perspective. And if anything, Bitcoin and crypto has gotten much more closer to traditional capital markets and public markets, where you can't submit a Bitcoin balance sheet to the SEC. But on the private side, and for a bank that's really comfortable with Bitcoin as collateral, we've seen some interesting takes.
That's very good to hear. I'm happy that it's gone that way. It reminds me that it's a psychological engine, the economy and the support for the dollar and the support for gold or the support for Bitcoin. And when I see these crowds and these people, it's not so much the market cap, it's the amount of detail they've already painted the future with, essentially, right? And when you come and find someone who's interested in creating some of these products. Is that really what they're coming to say? They have this idea of the future, and you're actually fitting Bitcoin into the portfolio within that context?
Yeah, I think it's absolutely right. A lot of the work that we do, is well defined for the next 18, call it to 36 months. And it's what comes after that, and how do we, ensure that we're providing things not only that our clients want, but what we think our clients are going to want into the future. And that is certainly looking for people who can help us paint that picture, to use your analogy, of what the world will look like in 4, 5, 10 years. And we can spend the next 3 years tinkering with that and actually run proofs of concepts or pilots to actually see how those go before launching it in production when the time comes.
Well, folks, my clicker is giving me a bit of heck here for being too late. Please thank our wonderful guests, John and Terrence.